Imagine waking up on a Tuesday morning, making your coffee, sitting down at your kitchen table and pulling out your phone to check your bank balance, just like you do every single morning. But this time, something is different. The screen shows a number you don't recognize, not because money was added, but because your account is frozen. You can't move a single dollar. You can't pay your electric bill. You can't buy groceries. You can't even transfer money to cover your rent. And the worst part? You have absolutely no idea why it happened. No warning, no phone call, no letter, nothing. This is not a scene from a movie. This is happening to real Americans, right now. And thousands of seniors across this country may be one small financial mistake away from experiencing the exact same thing tonight. So if you have a bank account, if you receive Social Security, if you've ever made a cash transaction in your life, you need to watch this video until the very end. Because what you're about to learn could be the most important financial information you hear all year. Here's what most people don't realize. The IRS and financial institutions have quietly upgraded their monitoring systems over the past few years, and those systems are now more aggressive, more automated, and more sensitive than at any point in American history. We're not talking about a government employee sitting at a desk manually reviewing your account. We're talking about algorithms, artificial intelligence, automated triggers that scan millions of accounts every single day, looking for specific patterns, specific behaviors, and specific red flags that signal, at least to the system, that something suspicious might be happening. And here is the critical part that almost nobody talks about. These systems do not know your story. They do not know that you're a retired school teacher. They do not know that you've been managing your money responsibly for 50 years. They do not know that the cash you deposited was from selling a piece of furniture or helping a grandchild move. All they see is numbers, and if those numbers match certain patterns, the system can move to restrict or flag your account, sometimes before a human being ever even reviews it. That is the reality of the financial world in 2025, and seniors are disproportionately affected because many of the habits that feel completely normal, habits that people have had for decades, can look very suspicious to a modern automated banking system. Now in this video, we are going to walk through 3 hidden triggers that financial experts and former IRS insiders say are among the most common reasons seniors find themselves dealing with account restrictions, frozen funds, and unexpected scrutiny. And I want you to pay very close attention to the 3rd trigger, because that one is going to surprise you. Most people have never heard of it, and yet it may be the most common trigger of them all. We are counting down from 3 to 1, and by the time we reach number 1, you are going to understand exactly why some seniors wake up to a frozen account with absolutely no warning. Let's get into it. Trigger number 3 is something called structured cash deposits, and it has a technical name that you may have heard before, structuring. Here is how it works. Federal law requires banks to file what is called a currency transaction report anytime a customer deposits or withdraws $10,000 or more in cash in a single day. Banks are required by law to report this. Most people know about the $10,000 rule, and so over time, some people, trying to avoid what they think is unnecessary government attention, started breaking up their cash transactions into smaller amounts. Maybe they deposit $4,000 one day, then $3,000 the next, then $2,000 a few days later. To them, it feels completely harmless. They're just managing their own money. But to the federal government, that behavior is called structuring, and it is actually illegal under the Bank Secrecy Act, even if the money itself is completely legitimate. The law does not require any proof of criminal intent. Simply breaking up transactions to stay under the reporting threshold is enough to trigger a suspicious activity report, and in serious cases it can lead to account restrictions or asset seizure. Now here is where seniors are especially vulnerable. Many older Americans grew up in a time when you handled cash regularly. Maybe you sold something at a garage sale, received payment for helping a neighbor, or you simply prefer cash for everyday expenses. And when you go to deposit that money a little at a time, just to be safe, just to keep things manageable, you may be unknowingly triggering one of the most sensitive flags in the entire banking system. Warning signs to watch for include your bank asking unusual questions about the purpose of your deposits, receiving a letter requesting documentation for recent transactions, or noticing a hold placed on funds you've recently deposited. If any of these things happen, do not ignore them. This is where things get serious. Trigger number 2 involves something called unreported foreign financial accounts or offshore income. But the way seniors get caught by this one is not always what you would expect. Most people hear the phrase offshore account and they think of a wealthy person hiding millions of dollars in a secret Swiss bank. But the reality is far more ordinary and far more dangerous for regular Americans. If you have a financial account in another country, even a small one, even one that was left to you by a relative, even one that you opened decades ago and barely think about anymore, you may be legally required to report it to the IRS and to the Treasury Department every single year. The form is called an FBAR, which stands for Foreign Bank Account Report, and the rules around it are strict. If the total value of your foreign financial accounts exceeded $10,000 at any point during the year, you are required to file. And the penalties for failing to file are severe. We are talking about fines that can reach $10,000 per violation for non-willful failures, and significantly more for willful ones. But here is the part that catches seniors off guard. This is not just about traditional bank accounts. It can include foreign pension funds, foreign investment accounts, even certain types of foreign insurance policies with cash value. And the IRS has dramatically increased its enforcement of FBAR requirements in recent years, using data sharing agreements with foreign governments to identify American account holders who have not been reporting. So if you or a family member has any financial connection to another country, no matter how small, no matter how long ago it was established, this is something you need to look into immediately. Because the IRS finding it before you report it is a very different situation than you proactively disclosing it, and the consequences are not even in the same universe. And now we have arrived at trigger number 1, the most surprising, the most misunderstood, and according to financial advisors who work specifically with seniors, the most common trigger of all. It is called a sudden change in account activity, and it sounds almost too simple to be dangerous. But here is what happens. Financial institutions are required by law to know their customers. It's called the Know Your Customer Rule, or KYC, and it means that your bank builds a profile of your normal financial behavior over time. They track how often you make deposits, how large those deposits typically are, what you spend money on, how often you use your account, and dozens of other data points. And when your behavior suddenly changes in a way that doesn't match your established profile, it triggers an alert. Now think about the life of a typical senior citizen. Your income is relatively predictable. Social Security, maybe a pension, maybe some investment income. Your spending patterns are consistent. Month after month, year after year, your account looks basically the same. But then something changes. Maybe a family member passes away and you receive an inheritance. Maybe you sell your home and a large sum of money enters your account. Maybe you start receiving money regularly from a family member overseas. Maybe you begin helping a grandchild financially and your outgoing transfers increase significantly. To you, every single one of these situations has a perfectly logical, completely innocent explanation. But to the automated system watching your account, this sudden change in behavior looks like a red flag. It doesn't match your profile. And when it doesn't match your profile, the system flags it. And once it's flagged, your bank may be required to file a suspicious activity report with the federal government. And in some cases, not all cases, but in some, that can lead to a hold on your funds while the situation is reviewed. The reason this is the most dangerous trigger is precisely because it is the most ordinary. You don't have to do anything wrong. You just have to do something different. So what can you do right now to protect yourself? The first thing is to have a conversation with your bank. If you know that your financial activity is about to change, if you are expecting a large deposit, if you are planning to make a big transfer, if you are about to receive an inheritance, tell your bank in advance. Document it. Ask them to note it on your account. This simple step can make an enormous difference because it gives context to the activity before the system flags it. Second, if you have any foreign financial accounts, speak with a tax professional as soon as possible about whether you have FBAR filing obligations. The IRS has programs that allow for voluntary disclosure, and coming forward proactively is almost always better than being found. Third, be very careful about how you handle cash deposits. If you regularly deal in cash, keep records. Document where the money came from, when you received it, and why you're depositing it the way you are. If your deposits look unusual, be ready to explain them, not because you've done anything wrong, but because the system cannot see your intentions. And finally, if your account is ever frozen or restricted, do not panic, but do not wait either. Contact your bank immediately to find out the specific reason. You have rights as an account holder, and in many cases, providing the right documentation quickly can resolve the issue before it escalates further. The financial system has never been more powerful, more automated, or more watchful than it is today. And that is not necessarily a bad thing. These systems exist to catch real criminals, real fraud, real money laundering. But the unfortunate reality is that innocent seniors, people who have spent their entire lives playing by the rules, can find themselves caught up in an automated process that doesn't know their story, doesn't understand their history, and doesn't stop to ask questions before it acts. Knowledge is your most powerful protection. Understanding these three triggers, structured deposits, unreported foreign accounts, and sudden changes in account activity, means you are already ahead of the millions of Americans who have no idea these risks exist. Share this video with someone you love, because in a world where algorithms are watching, being informed is not just helpful, it is absolutely essential.